Hello, everyone. So good to be with you. I've done a lot of presentations on the data derived from the OPR, but we've never done one sort of before the survey is due. And so we thought this would be an opportunity to sort of take you through what the survey is about, why to do it, hopefully overcome some of the common reasons folks don't fill it out. I have with me our good partner, Brian, from the Profit Planning Group. He's the COO, and we should, in a little bit, hopefully be joined by Megan, who's Senior Financial Analyst with the Profit Planning Group. So Brian's going to talk a little bit about sort of benchmarking generally, a little bit about the survey and what you get and why it's important to participate. You do get some special things, plus, honestly, without data from, a sizable group of folks, we have nothing to report. So really encourage you to consider participating if you haven't in the past. I'm going to come back and kind of share some of the insights from last year's survey. The survey is currently open. We'll talk more about that at the end, and happy to take your questions. So with that, Brian, maybe just talk a little bit about what the Profit Planning Group does and what benchmarking is.
Yeah, hi, thanks for joining us today. We're Profit Planning Group. A lot of you probably are familiar with us, past participants, people we've spoken to on the phone. But just briefly, 35 years ago, we pioneered a concept of affordable financial benchmarking. We took advantage of the personal computer platform and created our own benchmarking tools. We had some assistance and review from academic sources. In that time, we've conducted thousands of benchmark studies. We're a small team, but we're very experienced. We have analysts, we have accountants, data engineers. We think that we have the most extensive benchmarking experience in the field. There are others doing this work. They've been doing it for far less time. We're dedicated to continuous improvement and finding new solutions for benchmarking. So I guess it would be a good idea to just touch base with the definition of benchmarking. It's a process of comparing your business performance metrics to the metrics of the industry. And the goal is to identify gaps between your performance and the performance of your peers. With that information, you can identify areas where you might want to try planning improvements for your business. The benchmarks also establish a guide for setting achievable goals or reasonable goals rather than out of this world goals that you're never going to be able to make. And it's a key component to this new business practice, newer business practice of continuous improvement. This is a process where you meet, you plan, you measure, you go a period of time, then you measure again, then you compare your performance with the previous measurements to see whether your changes and your plan are effective. I think it's really important to know that these benchmarks are the only source of that kind of information for your industry. This is a survey conducted only among TechServe members, and it does not include financial information from any other industry at all. So it's exclusively information about your industry. Now, there are other sources out there that have more general resources. They have access to general financial information, general performance metrics, but they don't have industry-specific metrics, and their financial guidelines are not tuned to your industry. There are some accounting firms that will offer a benchmarking service. It's usually very costly, and frankly, we don't feel it's a very good service because there's no way they have access to an industry base of data. So we like to think of this as a crowdsourced asset for industry benchmarks. So this is the TechServe community's asset. This study is offered by TechServe as a free member benefit. That's quite a bargain. What we ask is that people participate, though. If we don't have participation, we can't establish the benchmarks. And you guys, and most companies need these benchmarks to test their performance, to gauge their performance. So it's a mutually symbiotic thing where the industry community and the individual member mutually benefit from participation. So the results of the study provide an independent, industry-specific gauge of your performance among peer performance. It's independent. We conduct this study independently, and it's industry-specific because it's only the TechServe community. So it also provides an opportunity for you and your team to annually checkpoint your performance. So in the continuous improvement cycle, there's usually an annual review. And this report, when you receive it back, is a great opportunity for your team to get together and do that annual review. The report, the participant report that participants receive provides a pretty good roadmap for your team to help plan for improved performance. Not only are benchmark reports valuable today to help you plan goals for the next improvement cycle, but they can be valuable in the future. We didn't realize this when we started doing this, but we have heard testimonials from folks who have explained to us the things that they use the report for, which were kind of surprising to us. But when we stopped and thought about it, we went, of course. So a lot of folks take this report to the bank, and bankers really appreciate the report. I mean, to the point where they call us and ask for reports in other industries. They're used largely in negotiating lines of credit. And we've had reports that people have gotten better rates with better lines of credit. We also had reports that it's been used as an addendum to shareholder reports annually. It's especially valuable for supporting the negotiation of the sale of the company. This is a kind of a new thing. There's a lot of consolidation going on in many industries. There are a lot of owners aging out of ownership, and they're trying to sell businesses. They're trying to pass businesses down to the next generation. These reports become extremely valuable. They demonstrate a performance trend that supports business valuations. We've had reports where business valuations were increased because the person doing the valuation was able to see these reports, see that there's a consistent pattern of growth, or at least a consistent pattern of revenue. So it is valuable to participate not just this year, but about every year. You may not think the report's valuable past a year, but in 5 years, you may wish you had those reports sitting on your shelf. And if you forget to participate 1 year, you've only got 4 years of those reports. Or if you drop out for 2 years, you've only got 3 years. So especially for a sale of a company, these things become an asset. We try to make it as easy as possible to participate. We know that nobody likes filling out the form. We know that nobody likes digging around, coming up with the numbers. It is difficult. We appreciate that everyone's really busy and they've got 5 jobs to do. So right out of the chutes, we collect the data in an Excel spreadsheet. It's a very familiar environment to all of us. It has the added advantage that it doesn't risk exposing data on a web page. And when you're done filling out the form, we let you choose the best way, the way you feel most comfortable submitting the data. You can send it by email, which is the way most people send it. But additionally, we've added our own secure Dropbox. It's very easy to use. You create a Dropbox account. It sends you an email to activate it. Once it's activated, you can drag and drop your document, your files, your Excel survey file into the Dropbox directly. So pretty easy, a little more secure than email. The other thing I should mention about email is you can always zip the file and put a password on it. Give us a call, let us know what the password is. So again, it sort of goes back to that, not exposing your data on more vulnerable, in more vulnerable environments. And we're here to help. We answer questions all the time from survey participants. Any kind of problem you have with the survey, any question you have about what data to put in where, questions about why we're asking it, help with understanding it, we're here to help. So you can call us, you can use phone or email to contact us anytime. Excuse me, sorry. I'd like to touch on some things we've heard, historically we've heard. We don't just do this for, we don't do benchmarking just for TechServe Alliance. We do benchmarking for over 100 clients. We run a lot of these studies and we hear the same kinds of things. We call people, try to get them to participate. And one response we get frequently is that they can't answer all the questions on the survey. Therefore, they think they can't send in the survey at all. They can't participate. It's not true. We will take any survey that's submitted. We encourage you to fill out as much information as you can provide, but we understand that there are some questions maybe you can't provide information for. So we encourage you to answer the questions that you can and leave the others blank. We encourage you to use reasonable estimates, not guesstimates, you know, something that's sort of based in a little more thought, but reasonable estimates are okay for a lot of these answers. Sometimes people don't want to report the detail. A great example is in payroll information. They don't want to report the owner's compensation. And we allow you to leave that kind of detail off if you're uncomfortable reporting it, but allow you to report the total payroll figure, for instance. And again, call us anytime if you've got questions. Other people think the survey is going to take too long or it's just too hard. We try to make this really easy. The survey's only asking essential questions. We try to keep those questions as streamlined as possible. You know, there's kind of an irony here. No one likes filling out the data. No one likes supplying the data, but everyone loves the results. And TechServe has actually gotten questions from people about, well, what about this kind of metric? Well, it's data that's not collected on the survey, so it gets added to the survey, so the survey increases in size a little bit, but it's data that's important enough for people to ask for it. So we try to evaluate the importance of these questions as we add them to the survey, and questions that aren't being used or questions that are providing information that's not valuable anymore are removed from the survey. Most of our participants report spending not too much time. The slide says several hours. I think it may be longer. It may be 4 hours. But in order to make it more palatable or make it easier for folks to participate, the survey has been designed in sections, in topic sections, so you can delegate the work out. So the financial sheets in the survey can be handed to the financial people, and the staffing sheets can be handed to the HR people. Compensation sheets can be handed to the HR people. So it's not just one person filling out the survey. Beyond that, we'll accept multiple survey files from one company, and we will go ahead and do the merging so that people don't have to, so you don't have to designate one person to do data entry after people collect the numbers on other files. Simply copy the survey file, hand it to someone, have them fill out their section, and then send us all of those survey files. We'll take care of merging them back together. When we do phone calling, usually to try to encourage participation, try to recruit folks, sometimes we hear that, well, we just don't use benchmarks. We hear that comment. And we feel strongly that people need benchmarks. We don't really think you can properly gauge the performance of your company unless you compare it to the performance of similar companies. And that's what this is. It's a peer group. It's TechServe members. You're doing this, you're doing very similar, you're involved in very similar work, very similar companies. It's a great chance to compare yourself with the performance of your peers. So we suggest that maybe participate for a few years, get a better idea of what the study can do for you, at least give it a try. Is what we encourage folks to do. So another thing we hear often is, we don't want to send you our confidential data. You know, you have to sign a confidentiality agreement, which we actually gladly will. Anyone who wants to provide a confidentiality agreement, we usually sign those without question. Very few people do, in fact, but we're very sensitive to how your data is managed. If we weren't sensitive to that, and if we poorly manage confidential data, we wouldn't be in business. So it's a keystone of our business. We've managed confidential data from folks from over 50,000 firms over the 35 years we've been doing this, and we've never had a security breach. We have a closed loop approach for your data. You send the data directly to Profit Planning Group. You don't send it to TechServe. You send it directly to Profit Planning Group. We process that data, we produce the results, and then we send your confidential report directly back to you. So TechServe is not in that loop. The loop is closed when we return the report. TechServe never sees it. No other company sees it. No other firm sees it. No other participation sees your data. When your data arrives here, we have strict security practices that we employ to keep that data safe. We store it on servers that are not accessible to the internet. It's on a separate network with no internet connectivity. Your data is put in databases that don't store your identity. Only your data is put into the database. We restrict access to that database to only the analysts who are working on the project. And the results of the analysis are based on the aggregated data. So the results in the reports don't reveal an individual's data. We also use strict masking to blank results that have small samples. And this prevents people from trying to mathematically back into numbers, which, since we don't provide the count of data that's contributing to something, it's difficult to do. Anyway, at the end of the day, at the end of the project, we wrap up by destroying all the files that you sent so that we don't have those on any server here. So you're asking probably, well, what do I get in return for my participation? We return 2 reports. The TechServe benchmark study returns 2 reports to you. The main study report is called the OPR. Unfortunately, Mark, what is OPR? Operational Performance Metrics?
Operating Practices Report.
Oh, the Operating Practices Report. I'm sorry, excuse me, I forgot. Too many acronyms. This report is a 50-page report. It's a little dense, but it presents the full results of the study. The study, really, the analysis spits out what I call a matrix. It's a rectangle. It's got rows and columns. The metrics are in the rows, and the samples or the subgroups that we analyze are in the columns. And this report presents every single result that's analyzed. The second report you get is the Confidential Performance Analysis Report. We call this the Participant Report. It's customized specifically for you. It compares your numbers with the numbers for the most appropriate peer groups. So this analysis breaks the sample into groups based on revenue, for instance. So if you aren't a 20 million plus company, maybe you're a $5 million company, you really aren't too interested in what the 20 million plus guys are doing. You want to focus on the guys in your revenue group, under 10 million. So this report pulls out just that column of information and presents it alongside your numbers. We view it as a self-help guide for setting goals to improve your performance. It also includes an Excel spreadsheet that's a simple planning tool to assist you in the planning cycle. It lets you run scenarios with your numbers. We call that the Profit Toolkit. I'm sorry, this slide dives just a little deeper. Basically, I covered it in the previous slide, but there's a valuable discussion in the OPR about what differentiates a high profit firm from a typical firm. The analysis identifies high profit firms based on before tax return on assets. And it's interesting to see that in many cases, those firms those firms' metrics are not dramatically different, but they're different enough in key areas to have a dramatic difference in profitability. So the study report, remember that matrix I talked about, it presents a column of results for all firms, typical firm, for the high profit firms, for revenue groups, there are 4 revenue groups, and for firms with different amounts of BMO revenue. All of this analysis includes industry staffing and compensation metrics, which I don't run one of these businesses, but when I look at those metrics, I think to myself, boy, if I was running one of those businesses, this is the kind of stuff I'd really be interested in. This is the kind of stuff that helps me guide and gauge my performance. And here's a list. It was supposed to be kind of a short list, but it got a little bigger. These are some of the industry metrics that are presented in the report. Metrics for employees, like it presents metrics for expense, productivity, employee turnover, and compensation. It looks at direct placement performance. There are metrics for job orders, contacts, assignments. There are also metrics for expectations and compensation of sales and recruiter staff with different levels of experience. So there are metrics for entry-level experience and senior experience and everyone in between. It also provides information about how people are dealing with healthcare and benefits, which I know over the last 5 years, heck, over the last 10 years, it just keeps going up, getting more expensive. Becomes a crucial expense that you really need to understand, and you also need to understand what your competitors are doing to provide this to their employees, so that you can offer competitive benefits. And again, that's examined in various VMO revenue groups. So if you're really heavy in you have heavy VMO business, light VMO business, or no VMO business, it changes some of these results. And then there is we'll touch on this later, there is a Salesforce analysis report. We do this special analysis for TechServe. This is an analysis that evaluates the productivity and expense associated with your Salesforce. So this is let's dive just a little deeper briefly into this performance analysis report. I may have touched on this a little earlier when we were talking about the reports that you get. The performance analysis report includes this performance scorecard, which we think is a pretty cool visual. It shows your rank for every key metric that's measured among all others who participated in the study. And very quickly, with just a glance, you can see where you're doing well, where you need to pay attention, and where your performance is within normal guidelines. It also includes detailed results, but these results are a subset of what's shown in the OPR report. Like I said before, as an example, it does not present every revenue category, every revenue group that we analyze. It only presents the revenue group that's appropriate for your firm. And it makes the comparisons for your firm quite easy to do on the page, rather than having to wade through 6 or 7 columns of data. It's only got a few columns and then a column for your firm. And for those of you who have participated in the past, we collect and present, we present your performance, we present the results for your performance over the past 3 years to give you an idea of how you're doing. Are you getting better? Are you getting worse? Where are you getting better? Where are you getting worse? It's all there on one page. and this is the profit tool. This slide discusses the profit toolkit. It's not a, this isn't some hugely complex Excel spreadsheet. It's designed to be simple and easy to use, designed for use with the PAR. At the back of the PAR, there's a page that tells you the numbers you reported, so you can put them right into the spreadsheet. And then it quickly builds financial plans and allows you to play what if scenarios while you're planning with your team, so that you can kickstart your performance planning, your planning for improving performance right away. You don't have to build your own tool to do it. So a lot of people find this quite useful for discussions about what if I reduce an expense here? What if I charge more there? Then what I thought we'd do is look very briefly, just so you get a visual of the survey and the reports. So first, let's look at the survey. I'm driving, so Sydney, did that pull up the survey? Okay, so we won't spend too much time on this. This is the intent of this is just to give you a visual. We collect your demographic data. We have some pretty simple instructions here. The demographic data is collected so we can hook up your data with previous year's data, and so we know how to get the report back to you. We have a statement in here about our confidentiality. You saw this before. The financial data involves a pretty simple balance sheet and an income statement. The income statement collects SG&A salary expenses, and it collects the load, that's payroll, taxes, group insurance, and benefit plan expense by class of employee, those who recruit, those who sell, and SG&A. And then a pretty upper level list of expenses. We try not to get too far down in the weeds with expenses. So you may have to add some of your expense items together to put a number in these cells here, or maybe you don't track it at all, or maybe you can't figure it out. And in that case, you provide us with a total. Again, reasonable estimates are accepted. So it's not a very complex income statement, not a complex balance sheet. These things you can send to your accountant. They should be able to fill them out pretty easily. And that's the financial information. What we're going to offer also is, if you don't want to fill out the income statement and balance sheet pages in the survey, you can just send us your financial statements, and we will do our best to try to map them into this chart of accounts and fill out these pages in the survey for you. The operations page collects operational information. We can't get all financial statements. Things about, for instance, number of offices, sources of revenue, staffing revenue, bill. It's a laundry list of stuff. Do you have any comments here, Mark, about what it's? A lot of this is, I guess I would consider industry specific. It collects compensation information by category of employee. And again, if you can't put these numbers together and you can't make estimates, leave them blank, move on.
This is very much tailored to our industry. Over the years, we've worked with business owners in really trying to identify those areas that folks want to track. And as you'll see, with questions like remote work, we're really making sure that we're keeping up with some of the changes brought on by the pandemic. But this is the data. These are the types of questions and or data points that folks are interested in. Very much tracking our industry. So back to you, Brian.
Yeah, and as I recall, Mark, some of these questions have been added at the request of participants who are very interested in these areas. So the survey sort of learns every year what people are looking for.
Right, and many of these questions are very simply answered, like the general trends. It's just what are you seeing, and so we can track over time. More consultants trying to convert, clients asking for discounts, obviously something that has certainly increased over time, insourcing, conversion, things of that nature. So again, these can be very simply answered for the most part. Some of the other metrics, it's stuff you really should be tracking if you're trying to maintain a highly profitable, successful business. And some of that stuff can come right out of your ATS, or it should be tracked elsewhere within your organization.
Since compensation is critical to your profitability in this industry, this survey collects a lot more data than our usual financial surveys. It collects compensation information for your sales force. And as I mentioned earlier, it breaks that into senior, beginning, and typical, everyone in the middle. And it does it for recruiters and salespeople.
Yeah, and Brian, it's one of the most common questions we get asked. Again, all of these questions are things that we get asked all the time. What is the industry standard? How has it changed over time? How is incentive comp weighted versus base? And so this is the kind of information we know owners and other executives and managers are looking for in terms of running their business, making sure they're competitive with their peers.
So I don't know if you have any comments about this, Mark. I'm just going down, like I said before,
Yeah.
the tabs are topically oriented. So conceivably they could be handed to one person or other people to fill out. This one collects information about recruiting and staffing, about recruiting sources.
Right.
What is it? Oh, it's contact metrics. I know the financial stuff, Mark. I'm not too good at this. Oh,
yeah, no, these metrics are key in terms of managing your business. As you've noticed too, we've added some related to virtual. And that's, again, trying to keep up with some of the evolving trends within the industry. There were many client meetings, certainly in 2020, after March, and for the most part in 2021, it's sort of coming back. So what does that look like? How do you track that? That's all very, very different these days. And so that's why we've added some of those questions. But all of this information you should be tracking somewhere. Most folks, obviously, in their ATS.
And we even collect information about what software packages you're using to run your business. There's always a new software package and always a new way to do it. So this collects information about that, and we can identify newer tools that are being used as they appear.
And then maybe, Brian, maybe quickly jump employee benefits, self-explanatory, the sales force, because I want to make sure I get to share some of the results from last year. We think this is very, very important. This is actually collecting information, and we've streamlined it. This is on a producer by producer basis, and really provides insight for our sales and recruiter metrics survey, and at a granular level as opposed to an aggregate firm-wide level. And so we consider this very important. I'll show you a few results from this, but really encourage you to fill it out. Obviously, the larger your firm, longer it takes, but we've streamlined it, cut out some of the questions, but really encourage folks to participate in that.
Sydney,
Brian, maybe we should go to, I think maybe showing folks just a quick glance of the report, maybe spend a little more time on the PAR, since, I think a lot of folks who have participated in the past have seen this, and I'll show some of the results from it. As Brian says, it's very dense. And so one of the things that we attempt to do when we do webinars updating folks on the industry is to try to draw out some of the highlights. But it is really a roadmap to improving your profitability. The other thing I should add, and Brian mentioned this earlier, is we are actually using this now in our M&A platform, where we're helping companies buy and sell IT and engineering staffing firms, because it really is the best industry benchmarking data out there. And so it really helps in terms of determining valuation and where you stand in the industry. Are you a top quartile or are you bottom quartile? Makes a huge difference in terms of profitability, revenue, growth, client concentration. All of those things are contained within the survey.
That's a great point, and that segues nicely into the participant report. Sydney, can we go, instead of to this one, can we go to that one? Thank you very much. So this is the participant report. Remember, this subsets the mass of data that's presented in the OPR itself, and it tailors it for comparing your firm to that data and to the appropriate data. And Mark was mentioning, where do I stand? Am I in the upper or lower quartile? This is the performance scorecard I mentioned earlier. It's a simple bar chart. It's showing all the key metrics, and it's showing your rank for that metric among participants. So for instance, this example firm is in the upper quartile for profit margin, but in the lower quartile for asset turnover, and in a middle kind of quartile for return on assets, etc. So this is what we call the 25th percentile is the border between inspect and fair. Fair and good are what we call the range of common experience, or the second and third quartiles. And if you're in the fourth quartile, you don't have anything to worry about. You're an industry leader. So really what you're looking for is these black ones to indicate where your team may want to pay attention. And I think pretty much that's it. You want to look for the black ones, but it gives you a real good idea of your standing and your performance for key measures. Let's see, graphs. And again, you'll notice this is only presenting 4 columns of data. Let me go there. The typical firm, that's all firms together, all firms in the pot analyzed. High profit firm, that is all high profit firms in the pot analyzed. And then just one sales range, or just one revenue column, and that's the column that your firm falls into, and then a column of the figures you reported for the survey. So this allows you to pretty easily and simply look across just 4 columns of data and see what the differences are between you and a high profit firm, between you and a firm in your revenue category, between you and all firms. And the layout is, remember I said there's a matrix of rows and columns. The rows are the same in this report as they are in the OPR, just less dense. And banker ratios, cash sufficiency ratios, revenue sources, profitability revenue, employee ratios. These are very, I would think these are very important to your business.
Hey, Brian, maybe if we could show them the toolkit, and then I have a few slides.
Yeah, let's do that. Let's do that. The toolkit. Oh, I can't show the toolkit.
Oh, you don't have the toolkit. Okay.
No, sorry. No.
I think it's the sales report. We can show them real quickly.
Yeah.
Oh, okay. Yeah, my error.
So I'm not sure how to sum this one up, Mark. It's an analysis of your sales and recruiter staff performance, uh, the revenue they generate, and what they cost. Is that a good snapshot?
Yeah, I think so. And you know, in terms of their you know, productivity, you know, the revenue to generate, profitability, some other data points. This is a slide I always focus on. I actually have it on a subsequent slide broken out, but really highlighting the underperformance of 60% of the sales force, where they're really at or below break even, generating less than $500,000 in gross profit. So really highlights what a lot of folks know, which is you need to constantly sort of top grade your workforce, your sales force, and it shows the extraordinary contribution of those top performers.
We produced this analysis has been done for a number of years, and so we can look back at its history. This slide showing the trend in things like base compensation, total compensation, revenue generated, and the maturity of the workforce over the last 5 years. And this graph indexes the performance of key metrics. So the index is anchored in 2015, and this is what it's done over 5 years to 2020. The metrics are compensation, revenue, gross profit, and contribution margin.
Brian, maybe just given in the interest of time, maybe I'll share some of the insights, and then we could come back with some questions.
Yeah, good idea.
Okay, thank you. Great overview. So, as we mentioned, I mean, these reports are just chock full of information. Sydney, could you bring us back to the PowerPoint? There we go. And when I do presentations, at events or occasionally, fly into a chapter, one of the things that we do is we sort of make it a little more graphically attractive. And it's really all the data is there. It's just being, displayed in a different way. And this really highlights, I'm going to go through this pretty quickly so we have some time for questions. But this is really showing a gross margin trend over the years, and certainly very telling. It's obviously something everyone in our sector should be watching very closely, and it differentiates what happens between the high profit firms, which are in the red, and the typical firm or the median firm in the blue. As you see, as we go, and of course, this is the last year we benchmarked was 2020, a very, very challenging year for many. We do see contraction during times of economic difficulty. No surprise, it makes logical sense as you go through a time when it's harder sometimes to sell. Margins contract. When it becomes easier, then margins tend to move in the other direction. Next slide. But we really, and this is the beauty of what Brian and his team in conjunction with TechServe and TechServe members have done over the years, we really tailor it to the industry. So at one point, we didn't break this out. We just looked at gross margin, and folks came to us, well, my business is mostly retail, direct client relationship. My business is what, we would call wholesale, VMS, MSP. Obviously the margins are incredibly different between the two. So very hard to benchmark against someone who has a substantially different business model. Now, for many of our firms, they're a hybrid of the two, but this does give you a good sense. Now, remember, these are median numbers, so that they represent the midpoint of experience among the survey participants. The other things we also capture is close rates. So it's not only about margins, but what we see. And this number has been so consistent year over year, or very close to it. Direct client relationships submittals to close is basically 1 in 3, and 37.8%. But we've been doing the survey with Profit Planning Group for 15 years, and it's always fallen within a very narrow range. VMS, we break out between VMS, MSP contact and no contact, and obviously great differences. These are very, very different business models, VMS, MSP versus direct client relationships, not only from a profitability standpoint, but also obviously from a close rate standpoint. Other interesting things, and of course, this was capturing 2020, a very, very interesting year, challenging year for many. But for those, what was interesting was those that did exclusively retail, direct client relationships, saw the greatest impact, whereas those that were in VMS, MSP programs, at least for those that were in our survey, did not decline during the onset and of the pandemic. And this is consistent with what I've heard from others, that the VMS MSP business seemed to withstand that initial downturn, whereas retail business suffered. We also measure it in terms of ultimate profitability. Operating expenses, a huge issue where I think the benchmarking reports provide incredible value. For the typical firm, this is all reflected as a percentage of revenue. It's 20.7%. High profit firms, it's only 15.3%. In a low margin business, which IT staffing is, that's a huge differential, and really is the differentiator between high profit and typical firm. Really, there was not a lot of difference in terms of gross margin, particularly in 2020. But what the report does is it breaks it down, as Brian highlighted on the survey, into specific areas. And so you can actually see differences. What are high profit firms? How are they more efficient? Where are they more efficient? How can I improve? And that's really what you should use the benchmarking report for, is to ask those what if questions. How can I improve? How can I, save 0.2% of revenue in this particular area, whatever it may be? Because that, in the aggregate, if you add up in a typical year, we're a 4% net profit before taxes business industry. Above that is you're performing above the industry median, below the industry median. But if you collectively add 1% as a percentage of revenue, that's a 25% increase in profitability. Slide. Payroll expenses. I'm going to move through these just so we have a few minutes for questions. A huge difference, obviously, in SG&A payroll. Now, high profit firms don't necessarily pay their people less. They just pay more for effective performance. And so that's a very important distinction. You'll see SG&A payroll as a percentage of revenue being lower with high profit firms. 95% of the expenses associated with our firms are people, whether the outside consultants or the internal SG&A staff, sales, recruiter, management, and ownership. Personnel productivity ratio, a great data point that the Profit Planning Group calculates. This is your efficiency in terms of generating SG&A, generating gross profit. So it's basically SG&A payroll divided by gross profit. And of course, high profit firms are a lot more efficient. I'm going to move through these pretty quickly. Net profit before taxes, 2020 was, even though some folks really suffered from the revenue side because of the pullback in expenses, a lot of folks weren't doing any entertaining or travel. Profitability actually surged on a median basis, 5.7%, much higher than our typical in a typical year for the median firm. And here you can kind of see that trend. High profit firms were even more profitable in that year. But generally, for the median firm, it hovers around that 4% range. It's been pretty consistent for a very, very long period of time. Client concentration, this is typical of our industry. 65%, 2/3 are effectively the top 5 clients, and about 27%, or about a third, 25% to a third, for the top client. Very heavily concentrated. Very important issue when you go to sell your company. In terms of making sure you have a sufficient diversification of clients, so that a potential buyer does not see you as unduly risky if you have too many eggs in one basket. Perennial need, I talked about this earlier, just a little prettier graph. Perennial need to upgrade AEs. Productivity, it's those top performers who drive the performance of firms in our industry. 75th percentile is 9 times, generates 9 times the revenue of those in the 25th percentile. And just similar, also much, obviously, very, very different profitability, 29% versus 20% gross profit. Contribution margin, which is gross margin after the cost of the producer, is significant differential, almost double. We capture who's using our PO. Are they a high profit or typical? And then we've been tracking, you saw that on the survey that Brian showed you, recruiting sources. Very interesting. This is for 2020, but if we go to the next slide, you actually see the trends. And we keep tracking these. Of course, job boards have continued to decline as a percentage of the source of candidates, whereas LinkedIn, social media, next slide, have increased substantially. At one point, we didn't even track this, and it is just, really taken off, as should come as no surprise, as a source of candidates. This was something based on a suggestion that we started tracking, rec to start timeline. And one of the things I shared, this is not only for your internal use, this is a great data point to share with clients, particularly those clients that take too long in terms of the decision-making process in an incredibly tight market when it comes to talent. And you can share this as an industry median. And if they're not in line with this in terms of their decision-making process, they are at a competitive disadvantage. And you can sort of use it as a, as basically, evidence of why they need to make the decision and perhaps not hold out for that purple squirrel. Really encourage you to take the survey, complete it. And I want to thank Brian and Megan for their work, in terms of assembling this presentation. Again, really encourage you to participate in the survey. If you have questions, Brian has made an offer. If you don't want to fill out the financial side of it, send your financials, and they'll extract the data from the financials, and you can use reasonable estimates. We're trying to, trying to give you the information that folks want in the industry. We're trying to do our best in terms of streamlining the process for you and making it as easy as possible. Brian and his team are incredibly responsive in there to answer your questions. So feel free to reach out, but please do participate in the survey. So Brian, Megan, thank you again. I'm going to turn it back over to Sydney.